The best of Money Matters. Under the Radar.
You're listening to Money FM 89.3, and it's now time for Under the Radar with me, Chua Tian Tian. Now, getting investors to meet and support tomorrow's game-changing startups. That is what we're going to talk about today. Now, founded in 2023, our guest, A2D Ventures, aims to be the region's leading early-stage startup investing platform and angel syndicate, expanding access to innovative companies and democratizing venture capital. Now, at the moment, the firm has a portfolio of 15 companies spread across a wide range of industries, such as biotech, proptech, fintech, deeptech, as well as aviation and electric vehicles. The most recently, A2D Ventures had in June 2024 invested in Seaplane Asia, a company that offers air charter and seaplane services connecting islands and coastal areas, in a funding round led by VC firm TK and Partners. It had also, in May 2024, invested in US sustainable mining startup BANIQL in a $1.6 million seed round. But what is A2D Ventures' investment mandate to begin with? Who are the investors under its syndicate, and what is the return on investment they're aiming for? And what is the total amount of capital deployed to startups under its portfolio for now? And in the meantime, A2D Ventures had in January teamed up with InnoSpace Thailand, a public-private joint venture in the country, to come up with Thailand's next big accelerator. The question is, what should we know about the accelerator, and what synergies will the accelerator bring to A2D Ventures as it sources for the next unicorn in the country? A lot of things going on, as you can imagine, and joining me on the line from Bangkok is Ankit Upadhyay, CEO of A2D Ventures. Ankit, welcome.
Thank you. Very excited to be here and share more about A2D as well as Venture Spark today.
Great to have you join us. And Ankit, we've briefly talked about A2D Ventures and how it aims to be Southeast Asia's leading early-stage startup investing platform, as well as angel syndicate. But let's hear from you. What is A2D Ventures' value proposition and business model? Are you solely an angel syndicate targeting angel investors? Are you charging a one-time opportunity fee or profit share, or are you considered sort of a fund manager, or are you both instead, because the legalities would be different, I understand?
Sure. I mean, I can share where the inspiration came from. So the inspiration came from how you see in mature ecosystems like US and India, where angel syndicates and SPV-led investments is the way forward for early-stage investments. There are several platforms like AngelList in the US that sort of charted the way of making this happen. So that's where the inspiration came from. Where we are today is we're a bit of both. So we are a angel syndicate that's productized angel investments through our platform. And as well as we have a sidecar fund that allows for us some flexibility when it comes to signaling and making those investments early on, right? As a business model, on the platform side, we charge a one-time fee to our investors, as well as for us to have a skin in the game, we charge a carry model. So we charge anywhere, we have a standard fee of 10% carry on the successful profits that these investments will make. And we come together as a collective where individuals join these syndicates, and hence we make those investments in the startups we choose to invest in.
So you're not considered as a fund manager. You do not take in funds from these angel investors. Correct to understand it that way?
That is correct. So we don't charge a management fee per se. In the classic fund structure, the managers charge an annual recurring fee, and hence that gives them access to fees that can then eventually be used for portfolio management, more hands-on approach with the startup that they have in their portfolio. For us, we're more of a platform that enables this discovery, people coming together and deploying, and the platform also enables a fair degree of scalability. So it enables us to bring in investors across borders. And today I'm happy to share more, right? But we have investors from all around the world joining our platform to invest into Southeast Asian companies.
And in that case, Ankit, who would you say are the customers or investors of A2D Ventures? Do they necessarily have to be accredited? How many customers do you have on board at the moment? Any names that are convenient for you to share?
Sure. I mean, today our primary customers are accredited angel investors, family offices, high net worth individuals, exited founders, etc. They are global in nature. Of course, we're based in Southeast Asia, so we have an outsized percentage of these investors on our platform from Southeast Asia. but our platform continues to attract investors from US, India, the Middle East. Another interesting trend we see is discovering Southeast Asian startups, especially early stage, is quite fragmented. We also see a growing interest from other syndicates that are not in the region come and join together with us. These are syndicate leads who have smaller syndicates in their part of the world. Recently, we had a syndicate that joined us in one of the opportunities from the UAE. That's sort of the persona of people who are on our platform, discovering these opportunities and co-investing alongside. In terms of numbers, today, I think we are a little over 1,500 as community members on our platform. Combination of people that are also not just purely joining the platform to invest, but they just want to be in the know-how. They want to learn what these opportunities are. They're excited about the region, didn't have access to these opportunities, or want to know where the pulse is in terms of the technologies that are being built, the problems that are going to be that are being solved. Now we can't allow, in terms of our privacy policy, we can't share names of some of these individuals, but we do have some unicorn founders who have built unicorn companies, and they're part of our platform. We have early employees of these large companies on our platform. We have over 40 plus family offices from around the world that are using our platforms. Very, very excited to see that while we built this platform targeting accredited angel investors, but the persona of users is now quite broad, and we're excited to enable this discovery through our platform for these investors.
When you talk about a platform, are we looking at an app or a physical platform, or are you talking about the structure of the angel syndicate coming together and gunning for a startup together in a more figurative sense?
So when I say a platform, it is a web-based portal. It's someone goes and signs up on. What we do is we then go scout and find these startups throughout the region. We conduct due diligence. When we're extremely convinced on the opportunity, we take the initial lead and say, guys, we're syndicating for this deal. We then share all this data on our platform, including pitch recordings, digital data rooms, investment memo, the team, their backgrounds, etc. Right? So as a user, they can go in and read everything they need to find out about the startup on the platform. And thereby, if they do choose to co-invest, then our investment platform then also enables digitizing that into the journey where they can sign subscription documents, join our SPV, get their share certificates, all done digitally. So that's the platform that I mentioned, which is a digitized journey of the user from discovery all the way through investment.
And let's zoom in on your portfolio, Ankit. The firm has since 2023 invested in 15 companies spread across a wide range of industries. We're looking at biotech, proptech, fintech, deeptech, as well as in aviation and electric vehicles. But first things first, let's take a few steps back. What is your investment mandate? Which are the sectors that you look at, and why is that the case?
So as a syndicate and a platform, we don't have a sectoral mandate. We have a geographic mandate. So we focused on Southeast Asia only, and early stage startups. What I mean by early stage is a startup raising anywhere between a pre-seed round to a Series A round. Because we really believe that in early stage venture capital, that's where the biggest gap is. And that's where we can add a lot of value by becoming another liquidity pool that these founders can now have access to. So that's the mandate. Now, in terms of some of the sectors that we look at, they have to be future forward looking, right? I mean, they have to make sense from a Southeast Asia perspective or going global perspective. But largely our thesis today revolves around the founders, who these founders are, what journeys have they been on, what gives them the right to win. And then we look at the market opportunity and the product. Because in early stage, there's very little to do with numbers. It's more to do with the vision, the mission, and sort of the founders that have come together to build this company.
And, since you're going to a startup as a pack with the other angel investors as well, is there a specific hurdle rate you're looking at when you assess the deals? Is there a minimum deal size or minimum level of interest among the other angel investors before you decide to go on board? And in terms of what you put in the term sheet, do you put in board seats, veto rights? What's the time horizon that you go for as well? Do you go for active or passive investment approach?
Sure. I mean, as a collective, we have to make sure that there's a minimum commitment and conviction in the business, right? while we conduct all the due diligence, we'd love to take signals from other investors. So typically we aim to get to 100K US dollars in terms of a commitment as a collective, and then also collect the feedback from our investors. How do they look at this opportunity? What does this opportunity mean in their side of the world? Since I mentioned they come from different parts of the world. So we do take that signaling. Now, in terms of the structure, for practical purposes, as a syndicate, it's very much like a VC. So once we define the terms, we do get access to voting rights, we do get information rights, etc. And taking a board seat or not is reflective of the percentage of ownership that you end up doing. We do have scenarios where we've taken board advisory roles, we've taken board observer roles.
Yeah.
But we're very founder friendly in our approach. And for our collective, all the investors can join with a minimum ticket size of $3,000 up to $50,000, giving basically two things. One, the ability to diversify and build a portfolio. I mean, that's part of our mission to democratize the asset class, whereby typically as an angel, you're expected to write a $30,000 to $50,000 check. But if you can build a portfolio of 10 startups and invest in 5,000 each, then essentially you do better risk profiling for yourself as a portfolio and diversifying your capital across multiple companies. So diversification and democratizing is a big element of what we're trying to bring to our investors.
Is there an IRR that you look at? And I'm just thinking about it in very layman terms. When some platforms come up with group buy deals, they do have a minimum size that they need to fulfill before they go after that specific merchant. Is it the same case as you as well? How do you decide that, this startup, there is enough size for us?
Sure. I mean, we work on a sort of a reverse model whereby we as the syndicate lead have to be extremely convinced on this opportunity.
Okay.
And once we are the first ones to say, either through our sidecar fund or us personally sometimes, is writing the first check. And then we open it up for others to co-invest alongside. Now, in the off scenario where we cannot reach a minimum target, let's say 100K US, then we also take feedback to understand why the investors weren't really convinced on this opportunity, right? In terms of returns profile, it follows the asset class of VC as returns, right? So you're talking about anywhere between a 6 to 8 year horizon, an average IRR of anywhere between, let's say, 20 to 40% if you're in that top quartile. So as an asset class, is no different than VC, right? It's still very venture capital, carries the same risk. And our job is then to just say, okay, if we do our job well and identify these opportunities and be extremely convinced on them, then they have the potential upside individually as each deal to then eventually do a 10x or 20x returns, right?
I see. Well, Ankit, let's take a look at where things are at for A2D Ventures before we looked at the road ahead. Given how A2D Ventures started in 2023, I'm assuming that a bulk of the capital you had upon starting A2D Ventures has been deployed and also locked in. Question then, how much capital has been deployed in your portfolio thus far? How far is A2D Ventures a profit-generating one? And how much dry powder do you have at your disposal right now?
So, I mean, in 2023, it was a bit of an experiment. We didn't know if this model is going to work. And for us, you can think of us as a bit of a rolling fund. We don't have any predetermined capital that's sitting with us. And at my disposition, I'm willing to deploy that capital, right? So for us, while our sidecar fund has capital, and we do deploy out of that, but primarily for us, every opportunity is an independent fundraise. So we bring this opportunity and we see what's the interest, and once everyone subscribes, then the capital is committed for that round. But I mean, it was an experiment in 2023. We didn't know if the model was going to work. Of course, we did all of our education, marketing, and positioning ourselves in doing this. As of right now, I'm happy to share the model's got some legs. It's no longer an experiment. We do see this working. As a platform, we have syndicated roughly $5 million US as of today. And again, it's a combination of the archetype of customers I mentioned. And we're just continuing to look in building this model out, getting our community to expand, get new opportunities. And I can't commit in terms of dry powder, how much I want to deploy. But if the trend continues, I think we're definitely on track and given the profile of our investors to do more investments, anywhere in the range of 10 to 15 investments this year.
That actually brings me to my next question, which is how far can your management fees or your opportunity fees generate that sustainable stream of cash flow for you to continuously deploy capital into more startups? Because the returns from the startups you have invested in, they may not be immediately visible as well.
Right. So our one-time fee that we charge our investors covers the basic operating expenses. And hence it makes sense for us to keep this going sustainably. We also have some advisory fees that sometimes we take on not just deploying or managing this fund, but advising some of the companies that we work with. So that makes the operating model a bit okay. But for us, we are also a startup. We treat ourselves very much like a startup. We don't treat ourselves as a VC fund. And we did raise some external capital as friends and family for A2D Ventures. And for now, that helps us going. Eventually, where I see this going is the sustainability angle will come in once we start generating some exits and sharing some of those profit. And hopefully with that pool of capital that comes into the company, we can keep this going for a much longer time.
I see. Now, if you're just tuning in, we're in conversation with Ankit Upadhyay, CEO at A2D Ventures. And Ankit, let's take a look at your geographical presence because A2D Ventures is based in Bangkok. So most of your portfolio companies, they are also based in Southeast Asia. Mostly, as I was looking through your portfolio page, mostly in Thailand and Singapore, but also in Malaysia, Indonesia, and the Philippines. So take us through your global footprint. Which are the most important markets when it comes down to, one, securing quality startups to invest in, and two, securing angel investors and early stage investors that would invest in you or invest with you? And, if I may just add on, what is the purpose of setting up headquarters in Thailand as well?
Maybe I'll tackle the last one first. So Thailand has been home to me for 9+ years now. I've been part of the tech ecosystem here for long enough. And I think for us, Thailand is an extremely underserved market. You have this commonality when you're in the region that Thailand doesn't have a great deal flow, or it's hard to come across good founders. So we felt we could have an outsized impact in the Thai ecosystem. If we're here, we're active. We consistently continue to mentor and educate some of the founders on what these companies could become if they carry the right mindset and tackle the right problem statements. So that's why Thailand, my co-founder is also Thai. So that as a team, we come together and said, look, Thailand has a distinctive gap and let's go fill that gap. So that's why it's Thailand. Now, in terms of our deal flow, Thailand, because we're here and we're more on the ground, and Singapore continue to have a very strong deal flow for us, where we continue to see great founders coming out of Singapore, and these are opportunities that we want to back, right? And also what's nice about this is most Singaporean founders from day zero are thinking about a regional or a global market, and not just Singapore, which is relatively a smaller market as well. So those will continue to be our strategic markets in terms of deal flow. Outside of that, we're actively scouting and looking for opportunities in the Philippines, Vietnam, and the region in general. Again, if we do find founders with the right problem statement and the right mindset, we're very happy to back them. Another part of our model is we typically love to co-invest with other VCs, and we have done so over our last 12 deals. I mean, most of our deals have been co-invested with other VCs, whether it's SeedStar, whether it's A2D Ventures, BANIQL, we've invested into a few deals together with, which both gives us a very strong signal that there is a venture capital firm backing this opportunity, and also for then our investors and platform users, the comfort, right? So we continue to do that. In terms of our investor base, I do see a trend, at least for us, where our most growth and in terms of user base and interest is coming now from the US, followed by India. And then the third one will be Middle East. And I continue to see that trend where we get a lot of meetings where people are interested, they want to learn more. Maybe they'd overlooked Southeast Asia, or they heard some positive signals from the region and now want to get more involved. So we're continuing to see interest from these markets. And for us, we have to figure out the best way to get the word out, get these users more educated, and over time, hopefully, invest in some of these opportunities.
Now let's take a look at some recent developments surrounding A2D Ventures, Ankit, because A2D Ventures had in June 2024 invested in Seaplane Asia, and that is a company that offers air charter and seaplane services connecting islands and coastal areas. And that is in a funding round led by VC firm TK and Partners. Aside from that, you have also in May 2024 invested in a US sustainable mining startup. It is spelled as BANIQL. Is it called BANIQL, if it's correct? But
Radical.
that's in a 1.6 million US dollar seed round as well. Take us through the rationale behind the recent investments and how they will help position you for future growth.
Sure. So both of them follow our thesis closely, where we found founders willing to truly understand their markets and where they operate and have a strong Southeast Asian angle. So in the case of Seaplane Asia, the problem statement that the founders are tackling is in countries like Maldives, where seaplanes are considered a go-to mode of transport. Why are we not replicating that model in Southeast Asia? We have countries like Thailand, Indonesia, Philippines, where there's a lot of islands. Tourism is on the rise. And how come seaplanes is not the common mode of transport here? Especially when it comes to last mile. You can imagine a journey where someone from the US lands into Bangkok, then has to take another flight to, let's say, Phuket, and then from Phuket, get on a boat to get to their island resort. So the idea stemmed from there. Again, these were deep experts in their domain, where they had been part of the aviation industry for a very long time, came together, found an opportunity to build truly a lifestyle-focused business. Of course, Seaplane is a way of fulfilling that lifestyle need, and has built that company. So Seaplane Asia is actually one of the only operators in Thailand that has a full license. When we invested, they didn't have a license, and that's why we invested, so they have the capital to procure that license. But now that's become a reality since we invested, and they continue to grow really fast. They're continuing to grow in other markets like Cambodia, Indonesia, etc. And what we believe is over a medium to long-term horizon, they'll be able to fill that gap of end-to-end journey of a user that is fast, convenient, safe, and reliable, especially when they're going to islands and resorts. Right? So that was Seaplane Asia. And in terms of BANIQL, this is a very unique opportunity. So while it's a US headquartered company, BANIQL's operations are in Indonesia. And for those who don't know, Indonesia does sit on some of the largest nickel reserves on the planet.
Yeah.
So the technology that the founders developed was to extract nickel from nickel ore that is sustainable and a much lower cost using chemistry. While they developed this technology in the US, the actual application to their pre-pilot right now is happening in Indonesia. And both the founders are Indonesian. So we found, again, a very strong synergy back with Southeast Asia to solve a Southeast Asian problem, which is nickel mining in Indonesia. And a technology that solves that problem is extremely scalable and could have an outsized impact on the country. And hence we did go ahead and invest in that deep tech company.
Now, in the meantime, A2D Ventures also had in January this year teamed up with InnoSpace Thailand. That is a public-private joint venture in the country to come up with Thailand's next big accelerator. What should we know about the accelerator and, of course, the synergies that the accelerator will bring to A2D Ventures as it sort of sources for the next unicorn in the country?
Yeah, we are extremely excited about Venture Spark. It's something that we started thinking about sometime early last year. It stemmed from two problem statements. Problem one was we as A2D were either rejecting or not fully ready to back some of the founders from Thailand. And the reasons were either they were too early or didn't have the right mindset or didn't really think through how to build a scalable business, right? And once we crossed, I would say about 100 of these founders, we realized that they all don't lack the spirit of entrepreneurism, but lack the tools to be a good startup founder. The second problem we saw was a very fragmented ecosystem, right? There were VCs, CVCs, government agencies, ecosystem players, but no one was bringing it together. Thailand hasn't had a accelerator since 2019. And if you don't build an accelerator that really goes to the grassroots levels and sort of gives these startups a platform to get the right mentorship, to get the right experts, and some capital, it's very hard to build a pipeline for then the future investors to come in and invest into relatively de-risked opportunities, right? So we saw that gap and we said, look, let's build an accelerator. We partnered with InnoSpace that gives us access to several corporates as their shareholders. 17 of their shareholders are the largest corporates in the country. We also partnered up with DEPA, the Digital Economic Promotion Agency. It's a government arm of the government agency that then said, look, we believe in the mission, and we came together. So we're very excited. We hopefully create the future pipeline and founders coming out of Thailand, able to provide the mentorship, experts, and capital. Some of the mentors are global mentors that are joining the program. And that eventually then will work for A2D because we'll have access to these founders and opportunities much earlier than anyone else.
Well, Ankit, that brings us to the next part of the conversation. What do you think are some investment opportunities for A2D Ventures within Southeast Asia from now until the end of the decade in terms of sectors, any investment targets or sectors that you're focusing on? In terms of geographies, where do you think are the bright spots within Southeast Asia?
Sure. I think the trend we see, and I wouldn't specifically say these are major opportunities that we're going after, but the trend we see is AI-led, right? So AI and automation will continue to have an outsized impact if founders are able to leverage these technologies to build enterprises and solve problems. I think some of the more specific areas where we see opportunity is food tech, where we believe food innovation is something that Southeast Asia is really good at. Typically has had the mindset of SMEs, but if we can convert them into sizable ventures that are scalable, I think that they will continue to do well. We're also looking at a lot of sustainability-focused ventures because that is a top of mind for governments. It's top of mind for corporates. Climate tech in that spectrum is important. So I think, again, broadly, we're looking at opportunities or problem statements that these founders are tackling that are extremely scalable, can be hyper-localized for Southeast Asia or go global. And the founders have that aspirations, right? So yeah, we're looking at broad spectrum because we're fairly sector agnostic as A2D, and as you've seen in our portfolio. But yeah, we'll continue to back opportunities that are scalable and have a great impact.
And looking into the future, Ankit, what are some future trends that will support more broadly the growth of angel syndicates and early stage investment platforms in Southeast Asia? How are you tapping on these trends?
I think we're tapping onto a global trend where we're seeing, especially in early stage capital, a continuation and strong interest of angels and angel syndicates coming on board and participating in these rounds. Again, angels and angel syndicates are taking the high risk and in turn higher rewards if things work out, right? So this rise of micro VCs and angel syndicates is on upward. Recently, I was in a conversation with someone out of the US, and they said they've done over 500 deals as an SPV and angel syndicate.
Wow. Okay.
I think the combination there are Com Ventures that Alex Pattis runs. So it's really fascinating to get into not tapping into your conventional VC or private equity and using angel syndicates as your liquidity pool. So I see that trend growing in the US. I think another statistic that was thrown out was about 26% of all early stage venture capital, pre-seed and seed, came through angels and angel syndicates in the US. So I think it's a global phenomena, and I'm hoping that continues to expand and inspire in Southeast Asia. That's why we're trying to build this and tap into this. And the other trend I also see growing is a lot of cross-border investing interest. As markets mature and present less opportunities, I think Southeast Asia is extremely attractive as a region, a large demographic, high internet users. And we're continuing to see a lot of interest from India, Middle East, and those sort of investors to just learn about the region and eventually, hopefully, invest or find synergies back into India or Middle East into bringing these ventures to their side of the world. So we're very excited about that. And I think from a moonshot perspective, I think AI would also have an impact on our business and VC as a business, right? So I do see, again, a possibility where it could be AI-led or AI agents-led deal sourcing, conducting due diligence, and it'll help us augment our capacity for sure as a platform and as a business. But yeah, a lot of AI-led funds or AI-led investment decisions could be a way in the future.
And a quick one before we let you go, Ankit. If you were to condense your future plans for A2D Ventures for the rest of this year into a 1-minute spiel, what would that be?
It would be to continue democratizing access to venture capital in Southeast Asia. We want to continue to back more founders from the region and continue to focus on Southeast Asia. And lastly, expand and enable cross-border investments as we grow our user base across the world. So that's our predominant focus for A2D. And for VentureSpark, we are trying to identify the next breakthrough startup that can happen in Thailand and hopefully showcase this startup to the region and to the world.
I see. Lots to watch indeed. Thanks so much for the insights, Ankit. That was Ankit Upadhyay, CEO at A2D Ventures. Thank you so much for joining us on Money FM 89.3.
Thank you, Tian. Really appreciate this opportunity.
Before acting on the information on Money FM, please consider if it's suitable for your own investment objectives, financial situation, and risk tolerance. To listen to more great interviews, download our podcasts at audio.sg or download the audio app. That's AWEDIO, audio at the App Store and Google Play.